Hello everyone, Ugodre here, and this is my money brief brought to you by Naira. It is part of the Follow the Money podcast that I bring to you occasionally, maybe not every day, but at least a few times a week. On today's money brief, I want to talk about something that you may not have noticed. While we were, busy the whole of last week, a lot of people were busy gearing up for the planned protest and monitoring events as they unfolded. There was a lot happening outside Nigeria, and there was one important thing that happened last week that I think could really affect everything we do here in Nigeria in the next coming months, if not even years. And so last week, the U.S. Fed is the U.S. equivalent of Nigeria's central bank. And so the U.S. Fed announced that they could likely cut interest rates. That's their own interest rates. The U.S. interest rate is probably around 5.5 or so percent now. Of course, compare that to Nigeria. Nigeria's interest rate is about 26.75%, if I'm not mistaken. But the U.S. interest rate at 5.5 or so percent is like one of the highest in decades. And so there has been discussions conversations over when the U.S. Fed will cut their interest rate. Because whenever the U.S. Fed cuts interest rate, it does have global effect, an effect on the global economy in general. And I'm sure you're wondering, how does this concern Nigeria? So that's what I just want to try and explain. So last week, after the U.S. Fed met, they kind of gave hints that rates could be cut. And so the conventional, general opinion out there is that they could cut by as much as 25 basis points. So remember the last time I said when you hear 100 basis points is essentially 1%. So when you hear 50 basis points, that's 0.5%. And then so 0.25 percent, essentially 25 basis points. So that's what the people are saying, that they could cut interest rate, and that's probably going to be the first cut, and then there could be further cuts before the end of the year. And so we could be seeing close to 50 or 75 basis points of interest rate cut in the US. And so you're wondering, how does that affect Nigeria? It does affect Nigeria in a number of ways, because whenever interest rate is elevated in the West, especially maybe in the US or the UK, then what you're saying is that it makes Nigeria, investing in Nigeria, compete with investing in these countries. So when interest rate is high in the US or in the UK or in Japan or in the EU, then investors will more likely invest in those countries than in Nigeria. And so it's no surprises that as soon as interest rates started going up in the US, we saw investment in Nigeria essentially dry up. That's foreign portfolio investment, because most investors just would prefer to stash their money abroad or in the US than here. And at that time, interest in Nigeria were also pretty low as well. So imagine US with a much bigger economy, much stable economy. They were doing interest rates. They were increasing their interest from like 0 to 2% to 3% and on. Nigeria's interest rate remained at about 8-9%. That's when I say interest rate, for example, investing in treasury bills. Of course, MPR was slightly higher at about 16%, but in reality, interest rate for treasury bills was just 9% or so. Not until late last year and early this year, when our interest rate now started surging. And so interest rates in Nigeria today, if you're going to buy treasury bills, is now about 22%, 23%, 21, 22%. And of course, the effective yield, or true yield as they call it, is even closer to 30%. So making it even more competitive than the US market. But now that the US Fed is signaling plans to reduce their own interest rates, then it means that foreign investment inflow could now start to be directed into Nigeria. You could see some of those monies coming to Nigeria, because what's going to happen is that investors in the US will simply just borrow from the US or collect money from the US at low interest rate and take that money to economies where they can find higher interest rate, which is, for example, Nigeria. So we've been running high interest rates. So it's a sweet deal for them. Of course, you have exchange rate risk to deal with. But now that we have a semblance of a free float exchange rate, investors can always buy hedges to cover their position. So I expect to see funds flow into the country. Might not be immediate, but all things being equal, you could see foreign portfolio investment increase at as soon as early next year. So what does this mean for you and your investment in general? Well, I think that for me, it means I kind of see uh, this impacting positively on the exchange rate. So if the Fed does go ahead and cut aggressively between now and the end of the year and early next year, then we could see foreign investment inflow into the country through portfolio investments. And if that happens, then exchange rate could be stable, could even strengthen. But of course, that also depends on whether how long the central bank can continue to keep interest rates high, because you need to keep interest rates high to be competitive. Of course, one can also say, well, since the US is reducing rates, then we could also reduce rates so that that differential can still be the same, right? Because, for example, our rates are like 2020, MPR is 26.75. US rates is 5.5 or so, which is like a 20% delta. So if they reduce their ours, then we could also reduce ours and still maintain that same delta. So that is what it means. It also means that you could also see a surge in our local stock market. Yeah, it could, because most times foreign investors, when they're looking for yield, they're looking for investments that can give them higher returns. So in a nutshell, all in all, it's positive that this is happening, even though the signal from the US as well is they feel like, well, their own inflation rate is slowing down. They are even afraid that they might even get into a recession, which is also leading to a sell-off of stocks in the US, which I'll speak to in another podcast. If you hold US stocks, you might want to pay a lot of attention to that podcast, because I'm going to try and break down why investors are in a frenzy at the moment, and whether it's probably time to sell off US stocks. But for now, US Fed is about to reduce rates. So in a nutshell, that could have a positive impact on Nigeria's exchange rate, and of course investment in our equity market. So that is my explanation. I hope that you get the gist. Pay more attention to that rate cut is likely to happen in September, so you might want to pay a lot of attention to what happens and whether the Fed will indeed cut rates, which I think is almost inevitable that they will cut rate. All right, so that is my money brief for today. I hope that I was able to explain that. Of course, if you need further information, you can always go to the comment section and drop that information. Money brief is for exclusive Nairametrics and Ugodre followers. So hit the follow button on any of our channels if you're not following, because very soon you're not going to get this for free. All right, do have a profitable day ahead. Goodbye.